Well, it's been quite a ride for gold and silver prices. Remember that we started off 2021 in a very exuberant note. We saw prices rally continuously for 4 to 5 trading sessions on a roll, all the way to $1,950 per ounce. That was, I think, last seen on the 4th or the 5th of January. We saw the US dollar or the dollar index as well tank quite significantly to sub 90 levels, and all of that really boosted gold prices quite significantly, because that is, at the end of the day, a dollar denominated commodity. However, from the 6th of Jan to now, in just 5 trading sessions, gold prices have plummeted a good $125. Currently in the US markets, gold prices are at roughly about $1,830 per ounce. In India as well, in just the last 2 trading sessions, we have seen gold tank 2,300 rupees per 10 grams. And it's not just gold, even silver, in fact, tanked almost 6,000 rupees per kg. So this is quite a sizable move that we witnessed, quite a sizable swing of sorts in gold and silver prices. Now, what exactly has changed? Well, firstly, we had the stimulus. We saw, markets around the world rally. Our own Indian markets, the S&P 500, all of these are at record high levels. So if you look at it from a more global perspective, there is once again interest back into the riskier assets, in equities, in commodities, even in a cryptocurrency like a Bitcoin. So in some markets, we are seeing money being pulled out of gold ETFs, not in India though, mind you, where ETFs, gold ETFs especially, are seeing continuous inflow. So that's one thing, that there's a lot of interest around the more riskier assets. Gold in comparison, silver in comparison, are what we term as the safe haven assets. The second point is, of course, the fact that this stimulus also led to a spike in bond yields. Now, when bond yields do rise, it sort of diminishes the appeal of the non-interest bearing gold and silver. You rather put your money in an instrument that can sort of, give you higher interest or more frequent returns. Gold does not do that. Gold, hence, is called a safe haven of sorts. So that further diminished the appeal, like I mentioned, of the non-interest bearing precious metal. And yeah, like I said, if on one side you have equities, etc., that are rallying, on the other side you also have these other alternative assets like cryptocurrency that's really grabbing a lot of the investor attention. So that perhaps also could be a reason why. But I think gold has seen a massive run up in 2020, but it's also cooled off very, very significantly. In fact, since September, we've seen this very range-bound move come by in gold and silver prices after it went to beyond $2,000 per ounce, hitting record levels back in August. But since then, it's cooled off quite significantly. There have been other asset classes out there that has given much more stupendous returns, even if you compare them from their March lows or from August or September, in fact, even though from those levels. So the interest in gold seems to be more or less now diminishing, but let's see what 2021 holds in store, because we still have a lot of big broking firms believing that this is still an asset that you should not lift your eyes away from.